we have our special guest and friend of the show. I'm going to categorize you as, because you are a friend of the show, Charles.
Well, thank you.
When we can call you on short notice, and here you are. And Charles Taerk is the co-manager of the Ninepoint UIT Alternative Health Fund. Charles, welcome back.
Thanks very much.
And you've been doing a little sojourning around the planet, I hear.
Yeah, I had a little holiday during August.
And where'd you go? What'd you do?
Took the family down to Colorado and did a little hiking and biking and
nice.
And golf,
very
river
healthy,
rafting, all kinds of outdoor activities.
And I noticed Colorado, it's legal there, right?
Exactly.
Yeah, yes, it is.
Were you sampling some product?
We did some due diligence. Yeah.
I did some due diligence.
DD.
Oh, there we go.
Yeah.
Interesting. So, do you feel like being away in the month of August that you missed some action in the market?
I wasn't that far away. There were emails and phone calls, and the first week of the holiday was pretty quiet. That was the early part of August.
Right.
And then the world changed on the 15th.
Is that the date that Canopy sold another whatever to Constellation? Yeah. That was a big date.
It wasn't a change of control yet.
No, they have the opportunity to go up to 55%, but really what it was, I think the shocking part of this was it's $5 billion Canadian. And back in November, when originally they said it was $250 million, their original investment, just think about the gain that they've made, that Constellation has made on that original investment. So $250 million got them 9.9%, and they had an option for a period of time to buy another 9.9%. And it really was a shot in the arm for the industry because it was very early, but it told people that this is more than just about domestic recreational. This is more than just domestic medical. There is a global business and a new global industry. And so the first shot was November, and then the market took off. And obviously in August, we got a new shot in the arm. Now the question is, who's next?
Right. So that, based on that $1 million question, who do you think could be next?
Well, there's a short list of companies. If you look at the Canadian LPs, you've got to ask yourself who has the capability to at least demonstrate that they have the wherewithal to have scale. Because we're talking global brands, global businesses, a lot of product, and good management teams. So there's probably 5 or 6 companies that
all billion-dollar companies probably already, right?
Yeah, at this point, yeah, I've lost track, but yeah. So you're looking at Aphria, Aurora, CannTrust, OrganiGram, Cronos for sure, and Tilray. I think those names would be ones that have the financial wherewithal and the production capability to meet the potential due diligence of whether it's the beverage industry or the pharmaceutical industry.
I watched a segment on CNBC. It was back in April after Rob Sands of Constellation Brands was being interviewed on his investment in the cannabis space. And at the time, this is in April, he's gloating about how well their investment in this company has done. And it was interesting to watch because Jim Cramer is trying to elicit some direction on where is there going to be a greater investment down the road, which of course Rob Sands was tight-lipped about. And
very professional.
And watching that, you just couldn't get a read on it. But I look at the way the whole Constellation Canopy tie-up has unfolded, and I juxtapose that to, for example, the Molson Coors Hexo tie-up, and it's just like, one is a textbook case of mutual driving catalysts, driving each other's valuations higher and creating a success. Well, the other one is the opposite of that. And so what's your takeaway? Like, it almost strikes me as like these guys had this in mind. This was planned. They said, we'll buy a piece of you, then you'll drive our stock up. And
well, I don't know that it's as simple as that. I think that there's been a significant amount of regulatory change in the U.S. over the last 6 to 9 months, and just after the original Constellation deal. And I think that Constellation is kind of reading the tea leaves and seeing the regulatory changes, seeing that the Senate, Congress, state senators, more and more people are in favor of legalizing by state and even at the federal level. And so they're putting pieces together to say, look, we need to be ready. Our opinion is Constellation wants to be ready both for global, but also on the potential that cannabis becomes federally legal in the United States. And I lead people to the press release the day that it was announced. It was quite interesting because there was a part of the press release that said, you know, they've got a $5 billion war chest for M&A, R&D, production, and capabilities throughout the world, including the opportunity in the United States. And if you can think about that for a second, how many lawyers were involved in this transaction? Got to be 30, let's just say. But they all looked at that press release, both north of the border and south of the border. And what's interesting is that legal counsel didn't have a problem saying the potential for the US market. So if you just think about the US market for a second, there is no single large player. There are state players. Some companies are in 7 or 8 states. But now you've got the muscle of Constellation Brands that as soon as that light goes off, if it does, then they have the capital to make a significant acquisition and be the player. And so I think that's where the optionality comes. That's why people are looking at Canopy as a mid $60 stock now. Yes, it's trading a little ahead of itself, but it's the go-to name, and so the opportunity is significant.
Sure, sure. How do you, okay, so looking at the performance in the share price of Canopy as a result of STZ tie-up makes sense. That justifies the valuation it has at 32 billion or something.
Right.
Then I look at Tilray.
Yeah.
And Tilray has got an equally monstrous valuation, but without nearly the sort of backfilled elements of the value chain that underpin Canopy's valuation. So you look at that and you say, well, that's got to be pure speculation going into that.
Well, different. Look, when you're putting together a portfolio, your top 10 all represent a different element. They're in the top 10 for slightly different reasons. So with Tilray, it's a very different story. Just went public, listed in the US, and it is operating in 11 countries on 5 continents. So it's new name in Canada, but as a private enterprise, they had set up distribution throughout the world. And so people are looking at Tilray, I think a little bit more on the pharma side. They signed a deal with Novartis. They're the first cannabis company to have a deal with a pharma, and they're going to be stamping the Sandoz logo on their cannabis pill coming up. So that's a major achievement, both from an operational standpoint, clearing due diligence with a pharmaceutical company. But if you think about it, if you've cleared due diligence, from a GMP certification standpoint, think about how easy it would be to sign a contract with a beverage maker, beverage distributor.
Sure.
The level of due diligence required for them would be much lower than pharmaceutical grade. So I look at Tilray as people are kind of putting a valuation on the fact that they're ready because they've already passed the mustard. So it's a matter of valuation and operation and who's going to work with who. Now, again, I don't have any inside information that Diageo or Brown-Forman or Heineken is speaking to anybody. I'm just saying, when you look at the companies, there are some that line up better than others.
Right, right.
So do you think this is the big value catalyst that is being priced into the market now, is that the market is saying, well, one of these 4 is going to be next?
Yeah, I think that's what's happening. And you're also seeing, I think, a real difference in those few names that are listed on U.S. exchanges.
Sure.
So whether it's Canopy, Cronos, Tilray, who are U.S. listed. So American investors really prefer to be investing on their exchanges rather than coming north to the TSX.
So do you think it also means that some of the smaller issuers are probably not going to get evaluations? In other words, as money goes into the bigger ones, maybe the smaller ones get neglected to some degree.
Yeah, maybe. I think they're going to have to prove themselves a little bit. They're not all going to get ignored, but there's
Sure.
a second tier.
You're going to have some fundamentals there
Yeah.
to make it look like, hey, they got lots of cash, or
Correct.
they got reasonably good management.
Right. Or, execution
Yeah.
strength with respect to extraction, or they're low-cost producers, or they've got a niche. We're growing this market of boutique or craft growers, being able to stand out in that business. But again, it's going to be domestic primarily. We really need to think about it as Canadians, that we were educated over the last 2 years to think domestic recreational. Now, the opportunity is to look at the global business. And when you look at a global industry, how many companies are really able to do that? And so at this point, it's very few.
Like, obviously, Canopy Growth is the kingpin right now with their relationship with Constellation. There's really nobody else there, right?
Nobody.
Right.
And you could even argue that some of the valuations that, like Tilray, I mean, but we've also said there's some strong money people behind this Tilray.
Well,
Yes.
that's true. That's the Silicon Valley cannabis play. I think of it as the Silicon Valley play.
So
very smart money behind Tilray.
when big money talks, little money walks.
Yeah. Well, and so the other part of this that's quite interesting for investors is the Canadian names have all run a great deal, but this is a global industry.
Yeah.
And we should be taking a look at companies that are focused outside of Canada as well, because the valuation that some of those companies are getting are ignoring some of the potential value, whether it's a U.S. company or companies focused in Europe or South America.
Yeah.
There are businesses that are growing that have significant revenue growth, have earnings, and in some cases, have better financials than what's going on in Canada, but they're getting ignored because they're not the top 4 or 5 names.
Mm-hmm. And there's got to be big pools of money out there that have missed this, and they're thinking, how do we get involved, right? Because people can't stand not being involved, like,
Sure.
whether they're politicians or, like certain countries are sitting there like, the hell, this was so obvious in retrospect. But you know how everybody wants to be part of something hot.
Yeah.
Right. So then, talking about companies that are in that top sort of quartile, Cronos Group was a featured subject of a short report from Citron Research by Andrew Luft, and by many accounts, the premise of the go short strategy was not strong. Excuse me, which is reflected in the share price, which has made almost a full recovery now.
Right.
Looks like it's going to go right by that. So,
or double top.
double top.
You know what?
Well, you always confuse me when you start talking
technicals.
Technicals.
Well, that was a lot of damage done, and as it claws back to those old highs, it starts to lose steam, and people, Anyway, I've been watching this stuff now for 35 years, and 35 years ago I thought I could read charts. Now I realize nobody can read them. But I mean, look, there are things you look for. You look for volume, and the markets can remain illogical longer than you can remain solvent, right?
Right.
You stand in front of this, you can get hurt.
That's right. And so you have to be careful. If you're going to go into a position, you've got to.
Well, it's just like, people that's probably shorted Cronos on Thursday.
Yeah.
Now they're thinking, what did I do that? Like,
Yeah.
So.
Yeah. So that was there any? Did you read the report?
Yep.
And was there anything there that you would consider as substantial, misrepresentation on Cronos' part?
Well, no. We didn't. We read it with. We were kind of concerned because I think the biggest part that was a head scratcher was with respect to the provincial supply agreements and not disclosing prices or volume or the details of their contracts.
Sure.
But our understanding is that the provinces asked most, if not all, suppliers not to disclose that information. So they were being singled out to,
they were just doing
to
what
say
they
you
were,
weren't disclosing. They were actually doing what they were told by the regulator.
Right.
And you know, there have been some discrepancies if you go back over time when Hexo Hydropothecary signed their supply agreement with Quebec. They were the only supplier that disclosed information about their contract. The other LPs didn't disclose. They were all asked not to, but somehow the press got some of the terms of that. And you remember with Alberta, Alberta named many suppliers, but only a few of them announced that there was an allocation up to a certain amount. So it wasn't a hard number. It was the province saying, we could ask of you a certain amount of supply, and it's going to depend on demand. So we were surprised that Citron came in with that, because they've done some really good work in the past and brought some companies down and brought some fraud to light.
Right.
But here was a situation where I don't think that had much merit. So good for Cronos to get in front of it and answer the questions, and I think people on the investment community side realized what's what, and they're now marching back.
Yeah. Charles, we've been talking about all these different companies. Why don't we talk about your fund a bit?
Sure.
Because your fund does very well in the space. So tell us about the fund and how it's been performing.
Sure. So just as a recap for some people that don't know, it's called the Ninepoint UIT Alternative Health Fund. We were the first.
Why 9?
Well, Ninepoint is the fund sponsor, fund manager. We were running it alone in the first year, starting in March 2017, and we just weren't getting awareness, sales, traction.
Right.
We joined up with Ninepoint Partners, which is the former Sprott Asset Management.
Right, that's right.
And got that team behind us. And since April, we've really been able to grow our asset base well, and performance continues. So we were the first mutual fund in March of 2017 to be an actively managed fund focused on the cannabis space. We call it alternative health because cannabis fits in our strategy with everything from pharma to new forms of medicines and health. So it's everything from health and wellness, like a Jameson Wellness, to healthcare technologies, to cannabis industry. And by having a wider portfolio allocation, we reduce the volatility that we talk about in the cannabis sector, while still giving people growth.
How many, excuse me, but how many issuers are involved? Are you invested in?
Yeah, the portfolio has about 35 companies.
Okay.
We like to keep it fairly concentrated, and of that, our top 10, which is going to be coming out for the end of August, very soon, 9 of the top 10 are cannabis-related companies, and that is, that changes over time because we are active. We're very proud of our performance, both from a total return standpoint, but also from a volatility standpoint. We are reducing the risk associated with people investing in the cannabis sector, because the volatility, as you know, I was watching before when I came in, the vol is significant, and the swings are really high. So how can you reduce that volatility and keep people invested for the long term? So we do that by being active. Periodically, we'll go to cash if we believe that a name is trading way ahead of itself. We'll take some profit. 2, we do own some privates. 3, I mentioned the portfolio allocation. And then 4, most recently, we started an options strategy in the fund for this sector, because the volatility and liquidity is now conducive.
Like call writing?
Yeah, we'll do covered calls, and we'll do cash secured puts. The cash secured puts are giving us a great opportunity with the high volatility. And our belief that some of the names might be trading ahead of themselves. We're able to look in and leg into a name while earning significant premium while we're waiting for the stock to come to our price. So all told, our 1-year performance is we're up 87%. This is after I said we're trying to reduce the volatility. But what's great about it is the volatility is less than half the volatility of the index. So the marijuana index has a volatility of over 55. And our standard deviation is 22.
Can you disclose how much money's in the fund?
The fund is a little over $30 million now.
Good.
Okay, so then what are you guys looking at new names as they come on in the cannabis space now?
Yeah, and not just cannabis. One name that started trading last week that people thought was a cannabis name. It's a CBD name, which is Stanley Brothers. So
Right.
they're in the hemp business. And again, part of the regulatory change in the U.S. that occurred over the last 6 months, the farm bill that was signed back in June really has provided flexibility for hemp, for industrial hemp. And Stanley Brothers has been around for many years. Charlotte's Web is their retail brand that people are very well aware of. They've got a lot of feature over the years on CNN and CNBC. And so we invested in the new issue, in the IPO.
What's the symbol on that one?
C-Web.
C-Web, okay.
And
I got $50,000 worth of that on the president's list, and I didn't even know it went public. Well, there's how plugged in I am. Oh, wow. 33. Oh, that's the wrong.
No, that's not it.
Yeah.
It came out around 9 or
It's
something.
on the CSE, I'm assuming.
Yes.
Okay, that's what the problem is. There we go.
There we go.
Okay, well,
Yeah,
that's doing pretty good.
Yeah.
IPO'd at $7, didn't it?
Yeah, it started last week.
Okay.
Right.
Well, so that's great. It's up to $12.
Yeah.
Oh.
And so hemp is also
Where are we?
Well, I don't know where
I don't
you are, but
Jeez.
apparently it's sitting in
Yeah,
the
what
account out
am
there
I,
on the West Coast
my
somewhere.
chopped liver? Like, I haven't got any calls. I haven't got
James, you're not sharing. What do you?
all these brokers I know, I didn't get any calls.
I didn't get any calls either. In fact, the only way I got into that stock was the guy who's heading up their investor relations strategy, Corey Paolo, was here with Emblem, who he also represents, and he was telling me about the thing, and I said, hey, I would like to have some of that because, I'm a big fan of the Stanley Brothers. There's a few other reasons to be talking to them. And so he said, I'll see what I can do, and he got me $50,000, for which I'm now very grateful.
Yeah. So the CBD oil is, the reason they call it C-Web is after their famous patient whose name is Charlotte.
Right.
Charlotte's Web.
Yeah. Great story. Great story.
And really it speaks to the legitimacy of the medicinal properties of cannabis oil, CBD oil, and you can get CBD oil out of hemp.
Right.
So they're doing really well. I think last year's revenue for Stanley Brothers was $40 million US, and they did $8.5 million in net income. So real business.
Wow.
And
wow.
yeah,
So
hence the attention.
So this thing has the potential to go, like I look at the Tilray number and I'm looking at Charlotte's Web and thinking, well, this could be next.
Yeah.
Huh, fascinating.
One observation I sort of made, like where you went, like say 6 months, 9 months ago when they're all hot, they're all flying, it's gotten a little more selective, hasn't it? Like,
yes.
It's gotten more selective, and some, like we saw Cronos back off sharply while the others are racing ahead.
Right.
And so there's it just seems to me there's a more discerning market out there.
Yeah, I think last year it was early. I mean, it's been 3 or 4 years, but it was very early, and they all traded in the same type of direction. One company had positive news, they all went. On the other side, one company had bad news, they all fell.
Yeah.
This year, with more liquidity, more market awareness, the companies are now trading based on their own financial results, their own press releases, their own joint ventures.
For instance, one issue, and is Osodial. How do you?
Isodial.
Isodial, yeah.
Isodial. I can never say that
Did that
properly.
thing ever come back to trade?
I don't think it's back yet. But that was $21 after they consolidated it on an equivalent basis, and it's $3.50. You can't even see that move from $3 to $3.50 on a chart because it's sort of.
Yeah.
And I guess there's some issues, right?
Sure. Yeah, I mean, that's over time, people start to dig into it and
pay a little more attention, sharpen their pencils.
Yeah. Okay, yeah, so it's still halted there. Interesting. So now there's one of the companies that I'm really looking forward to coming to trade is Canopy Rivers, who is by way of full disclosure, a client of our media production and traffic generation group. So that out of the way, I'm curious as to your opinion on your level of anticipation of the Canopy Rivers, given that it's such a interesting portfolio of products.
Sure, and that's what's interesting about it is it's really an incubator for craft and small cannabis companies. So whether they're doing R&D or they're doing product innovation, doing the science around the plant, That's what Canopy Rivers is devoting themselves to. So there's an opportunity to commercialize those innovations.
Sure.
And so that'll be very exciting.
Yeah. So do you think that having Canopy Rivers as a partner as an investor in your company is in and of itself sort of a value catalyst in the form of a backstop on financing? You know that you're not going to be allowed to run out of money when you've got such a important partner.
I wouldn't say that you won't be allowed to run out of money. There's milestones that these companies have to hit.
Right.
And I think from the Canopy Rivers management standpoint, they get to see who's successful and who's moving the chains. And those companies that are having trouble, they can look to see what kind of attention or assistance they need. But sometimes things don't work out. So I wouldn't say it's an automatic, but I would say that the portfolio approach diversifies Canopy Rivers' risk, right? So they're going to have 10 horses to run with, and they'll be able to sift through and pick the best ones.
Yeah, right.